Welcome back to another week with Dana and David on this week's Market Pulse. We're going to talk a little bit about what we're seeing after the 4th of July, what's going on with the summer selling season, some topics around investing in real estate. So if you've never invested in real estate or want to hear a perspective on it, stick around and help me welcome Dana. What's up? Help me welcome, like we got like a live audience. Wouldn't that be awesome?
Yes.
I want the really long Bob Barker microphone for this thing going forward. We got surely somebody around here can order us a Bob Barker microphone. Oh, they still use that on there, don't they? Who does prices right now? Drew Carey?
I don't know. He might have a lapel microphone.
Is his name Drew Carey?
It is Drew Carey.
Look at me, nailing it. All right, what's up? How are you? How's your week? How's your 4th of July?
It's good. Nice 4th of July. So how about yourself?
Yeah, got all my digits. That's stuck with. I know it's text Ryan Taylor, and he's like, "Save your fingers." I'm like, yeah, yeah, it was nice. Got out, got to get on the boat for a little bit and shoot some fireworks off and have some friends over, and so was a good time. Happy birthday, America.
250.
350. That's right. All right. So, what are you seeing? What's going on in the market? We'll speed through this because I know people have short attention spans.
Yes.
What's going on in the market right now?
Yeah, I would say, always kind of does, have a little slight pause around a holiday. And so usually once everybody starts to get back in the rhythm, back into town, that type of thing, we should see it kind of uptick based upon history and trends lately.
Was that a Huffaker Hounds joke? Slight pause?
Did I say pause?
Said slight pause. I tried slight pause. Like puppies, slight pause in the market. Let me interpret for you.
Yeah.
Yeah. So we saw a little bit of a drop. Well, we say a little bit of a drop for the 4 counties that we track. 587 homes pended have not dropped below 600 in a quote unquote selling month in many years, right? And so you got to go back to January and February to see something below 600 units a week going under contract. So you kind of go like, man, that is fascinating, right? I think it's interesting data. You got a lot of agents out there that aren't real sure what the market's doing. We might fall into that group right now. Like it just is a strange market. And so typically we do see that rebound kind of a week or two after. I was going back and looking earlier at August closings, at least for our company's trend over the last 7-8 years since we've tracked it. Almost all of them right at around 13 or 14 million, Dana. It's the most consistent month. If you take 2021, I think we did about 22 million in 2021, but that was a COVID year. It was a weird year. So you kind of go like, all right, not a whole lot of deviation month over month when it gets to August, which is what fuels July sales, right? If you guys are out there thinking about what's going on in the market. So you're like, all right, let's see what happens over the next 2 weeks, right? If we continue this downward quiet trend over the next 2 weeks, I think people should start to get a little concerned about what's going to happen overall. And what does the end of the year look like? With the war kind of, I don't know, today heating back up in Iraq and things like that, pushing on inflation, possible we finish this year below 4 million, right? Nationwide, which would be slower than the last 3 years.
What did they predict again? Was that 4.2?
Yeah, usually 4.1, kind of just saying kind of the same things. And again, but this time last year, I think we were having the same conversation and we did end up right at 4.1. And so really difficult for us to get below 4 million as a nation anymore, just because of the number of households and the number of people that need housing, right? So what are your sellers saying? Are they concerned? Are they adjusting prices? Are they understanding because of where we're at in the holiday season?
We talk about it week over week, kind of looking at the data week to week, kind of zoom in, zoom out, and just seeing what we need to do to pivot, whether that's freshening our marketing, adjusting the price. And of course, that refreshes itself on the market anyways. But our sellers are great, right? If they have to sell, we also have those discussions at the listing table too about our price improvement plan. So they know what to expect going forward.
Yeah. Yeah. I mean, like you said, we actually saw a fairly busy Monday and Tuesday, had some deals currently getting, what are we on Wednesday already? Some deals pending and some offers coming in today. So pretty busy start to the week, which is about what we would expect to see. Just kind of have that activity kind of just move forward because of the holidays. Again, it being on a Saturday also. And being a rather large 4th of July. So yeah, pretty typical. So we'll probably see that play out over the next few weeks. You and I were talking earlier about investors and just what we're seeing in the market from them. I know from a lot of standpoints, you've got the stock market, which is really at an all-time high, which is fascinating because that's being driven a lot by the AI, by the tech players that are out there, by the indexes. And so kind of building up a portion of the market. But again, seeing record numbers for the Dow and the S&P 500, the Nasdaq, off and on over the last month or so. And so you kind of think about like, what does that mean for the real estate market, right? Like What are you hearing from people, or what questions do you think people might have?
Well, I think, if they don't own any investment properties, where do you start, right? When you bought your first investment property, what made you make that decision with that specific property? Was it a good move? Has it been beneficial? Almost like investing 101. And then now you've grown that portfolio, of course.
Yeah. Yeah. I mean, I think you go back to like, there's never a wrong time to buy the right piece of real estate. And so there are seasons where it's more apparent what a good deal looks like. And then there are seasons like right now where you really have to understand the terms of the deal and the structure to make sure that it is making sense. The thing I like about investing in real estate, there's so many ancillary benefits to it. But number one, it's unlikely to ever go to zero, right? Like even if it goes down in value, you don't, again, just like the stock market, you don't make or lose money based off the value. You only make or lose money when you sell it, right? And ultimately for us, we don't have any real intention to ever sell our properties, which is weird. Just like BlackRock or any of these other large institutional investors, anybody that owns rentals right now, because of what's happened with them, which is causing a lot of the market shock, right? So you think about how that rolls over into the residential real estate market. If 5 or 8% of the market is being held off single family properties because they're now rentals, that is limiting supply, which is exacerbating the supply and demand issue that we have because builders didn't build enough homes for the last decade. So you got builders not building enough homes. You've got property owners or investors now owning more single family homes. You have a small percentage of homes going cash right now, or cash offer programs like our THG 60 program. And so you couple that all together and you go, you're kind of missing, I don't know the actual stat, I would guess 15% of the market. So when I look at investing in real estate, the thing I found fascinating is, maybe butcher the date, but it's probably only been 10 or maybe 10 or 12 years that residential real estate has been considered an asset class for something like an American Homes for Rent or BlackRock Properties to be able to invest in as a Wall Street firm, right? I think we gloss over that a lot when explaining that to people, because you really think about that means that 15 years ago, there wasn't a Wall Street firm wasn't allowed to take funds that they manage and invest in residential real estate the way that they are today in the form that it is. And so it's a new player in the market that's been and so this housing bill, a big piece of the housing bill is saying that that has to be limited in some regard, right? Otherwise,
Yeah.
what keeps all the homes in America one day from just being owned by corporations, right?
Right.
So the thing I love about real estate is everybody needs shelter, right? And so no matter what, if I buy a piece of real estate and it does go down in value, I still have an actual tangible brick and mortar asset. And there's just nowhere else that I really can say that when I'm investing my money, right? And so I think about if where I would want to buy my first home right now, where I would be looking if I'm a person in the market, is really my own home. If I own a house right now at a 2.5 or even up to 4% interest rate, man, that's so valuable over the long term, over when you're looking at the terms of the deal to buy it. I just go like, if I'm really thinking about moving, I was just having a coaching call with one of my clients and she was talking about moving. And I was like, man, what does it take in order for you to keep your current property? I think she said at a 2.7% interest rate, right? It's like, it's not feasible for everybody, but I think you got to stop and look at that. Yeah, my first investment was actually one of the first homes I ever sold when I left new construction and came into residential real estate. And they called me, he's got a job transfer. They called me a few years later after I'd helped them buy it and said they needed to relocate to Atlanta, and cute 1 car garage, 1 story home, 3 bedroom, maybe like 1,500 square feet, just a perfect little rental, right? Great location. My aunt always told me, right, buy the worst house on the best street when it comes to location. And so this kind of fit that, right? And so, yeah, so we discussed what terms would look like and agreed to buy it. It's been phenomenal for us. I think,
I
cash
love that.
flows.
Buy the
Right.
worst house on the nicest street. I like
Yeah,
that.
yeah, yeah. My aunt told my mom that. It wasn't like I remember. My mom just has to remind me. Right? But yeah, buy the worst house on the best street. I also have bought some of the best houses on the worst street. And I can tell you it also is painful in reverse when you make the wrong purchase. Right. So yeah, I would encourage anybody that's out there, number one, hire a realtor that does it, right? That works on investments in and out, or at least understands that game well enough. But I just think right now with where the stock market is, if I'm thinking about where to put my money, there are some deals to be had out there. And what we don't want people to do is follow that herd mentality. Like everybody was an investor in what? 2020, 2021, Dana? I mean,
I mean, I still get probably 5 to 6 texts a week from other agents looking for off-market properties. I know some of it's probably spam, but I mean, that's really where the deals are, is not on the market.
yeah. Yeah, I think most savvy investors would argue that if it's on the market, it's, probably the terms today. Again, I think 2021, you could find on-market homes and the terms were still favorable because interest rates were low, right? And home prices hadn't skyrocketed the way they have. Today, it becomes, the four things. Again, the other thing I love about investing in real estate is, again, I'd love to put a myth to bed, right? So, what do you think the average return on the stock market is for people? 10, 12%?
Huh?
10 or 12%
Yeah,
maybe?
I was gonna say 10 to 15.
Yeah. Yeah, I think, conservatively, if you're looking long term, you might even say 8. But let's say it's 12%, right? And so when I talk to financial planners, they say you're not going to get a 12% return year over year in real estate. How much does real estate go up on average a year?
3 to 5, if that.
Yeah, 3 to 5%. So let's call it 4%. So on face value, if I'm not educated on it, I'm going to look at it and go like, well, I'd be smarter to go put $100,000 into the real estate or into the stock market to get my 12% return versus putting $100,000 into a house that's only going to appreciate at 4%. But the piece that people miss is that you're putting $100,000 down. Let's say I believe you should put 20 to 25% down. I like to carry my properties at no more than 75% loan to value. So if I'm putting $100,000 down on a house, I'm buying a $400,000 asset. So that 4% return, when we average real estate, are we saying it's only a 4% return on the down payment? No, we're saying it's a 4% return on the entire value. So a 4% return on $400,000 versus a 12% return on $100,000. My math off the top of my head would be $12,000 in the stock market and 16,000 in the real estate, right? So again, you start looking at that and you go like, that's just simply the return on it. You're not looking at the tax advantages of it. You're not looking at the cash flow. You're not looking at the debt pay down. When I rent that out, someone else is going to pay off that $300,000 loan for me, right? Plus, there's usually a little bit on the upside that I get to, go feed my kids at Chick-fil-A with, right? So all of those things, I think when people are thinking about where to put their money, do I go put my money in at the top of the market right now in the stock market? Maybe you love SpaceX, right? Maybe you want to go be an owner of, the new civilization on Mars, or maybe you want to own a property, right?
Well, tell me more about that, the tax benefits. I know that you're a pro now with a larger portfolio, but, you know, having 1 to 2, additional assets, you know, where's the tax break on that?
Yeah, again, the benefit of owning real estate is I can own a $400,000 asset for $100,000. I can't go get $400,000 worth of SpaceX for $100,000. So I
Mhm.
want to go. So if I go out, so now I own a $400,000 asset that I've got a $300,000 loan on. Right, that $300,000 loan comes with interest, so that interest allows me to itemize my taxes now and take that tax deduction off of the interest write off. And so now I have this property where I have the interest that's being paid, I have the revenue coming in from a renter, I have the expenses associated with it. It's pretty much washing itself out. More than likely on most properties, because you actually get to depreciate the asset over 27 years, you're going to show a loss every year on that property. So let's go back to my original investment of that one home. I think I bought it at 225. I think now it's worth about 400. And you go back and you think like that loan that's being paid off, that house probably shows on paper that it loses 15 grand a year, right? Because of depreciation of a rental property. Now again, does that asset actually depreciate? No, it's just on paper, right? It's actually appreciating as an asset. So on paper, it's showing let's call it a $15,000 loss. Well, if I'm a normal person at a 25% tax bracket, just using that for illustrative purposes, right? 25% of 15,000 is what? 3750 ish, right?
Mhm.
Well, there's $3,750 a year that I get back on my taxes, right? When it comes time for Uncle Sam. So you stack 10 of those, that's a 37,000 for. And again, if you're in the 40% tax bracket, now you're talking about, a lot, but it starts to compound and compound and compound. Once someone can actually, so that's for any investor out there. That tax benefit's going to be there because you get to deduct the depreciating asset, you offset mowing the lawn, paying a property manager, the loan interest, all the costs associated with having that house, right? you get to depreciate that. Now, let's say that you're a realtor or you're a builder or you're a full-time investor or you own Airbnbs and you can justify 750 hours a year in the real estate space. You now open up something that's only available to a certain class of investors, but that's cost segregation. Right. And so bonus depreciation just got renewed this year. Cost segregating a property essentially means that I can write off or accelerate the depreciation on all the assets in the home. So light fixtures, plumbing fixtures, toilets, carpet, flooring, all the things. Right. And you do this study that shows what each one is worth according to the IRS rules. And so once I have that, the napkin math on it, Dana, is if I buy a $500,000 home, I'm going to be able to cost segregate it somewhere to the tune of 25%, right? So 25%, because you can't use the land, right? So let's say a $500,000 home is $100,000, that's 400,000, and cost segregate is 25% of it's $100,000. I actually get to turn that in on my taxes as a $100,000 cost, which again, if I'm in the 40% tax bracket, that's a $40,000 tax savings on that house. Now there's a lot to that. So there's a ton of disclaimers. I'm not a tax advisor. I just play one on TV, right? So people should definitely check in and check with their CPAs,
Right.
do their due diligence, right? But ultimately, for a lot of people, if I can do 2 or 3 of those a year and can write off $40,000 or get a $40,000 deduction in my tax bill, to me, that's the same thing as getting to make $40,000. I do 3 of those, it's 120 grand a year that I'm not having to pay in taxes that I now can go back and reinvest into other properties, right? So again, only certain level of investors can do that. But again, that's why you should be talking to Dana or talking to me when it comes to where am I going to go invest this money? How do I move right now? That to me, that's the number one question everybody should be asking. How do I move right now? Keep my 3% interest rate, anything under 4%. I would say, how do I keep that house, especially if you've owned it prior to 2020? You know what I mean? Like if you bought a house and you owned it prior to 2020 and you refinanced it, you hit the jackpot,
So
right?
just start off just having the conversation with your local lender partner. Is that what you're saying?
Yeah, yeah, exactly. I think the deciding factor for almost everybody is going to be cash flow and approvability, right? You got to make enough money. There's some DSCR loans out there and things like that that you could use to refinance or pull out some equity. But you'd have to be able to keep the property and make the payment and carry the debt on the new house. If you're in a position where you need the money out of your current house, it doesn't mean it's not doable. There are some ways to pull that money out and do that. But again, you just need a good realtor that understands it, a loan officer that understands it, that can see the total debt ratios with both properties. And if you feel comfortable, again, beyond what makes the most sense on a financial term, we talk a lot about wealth building around here. You got to be able to sleep at night, right? So I'd say like I early on maybe made some choices that caused me a lot of stress and anxiety. And while they ended up being good choices, the peace of mind was nerve wracking. And so I always caution everybody now, right? Like you got to be able to sleep at
It's
night.
a risk, right? It's a scary risk. And, fear or faith, we choose, right?
Yeah. Because I mean, look, just because you have a 3% interest rate and the bank tells you could do it, if you're going to have a $2,000 mortgage payment on your current property and a $2,500 mortgage payment on your new property, and that $4,500 a month is going to stress you out, you got to be able to carry the rental if there's not a renter in it, right? And it can't stress you. It shouldn't stress you out to the point where you're losing sleep. It's just not worth it, right? Again, it will all come the way that it's supposed to. But again, I think calling you, calling me, calling a Huffaker Group agent, where we do this a lot, and having conversations with people around it, us being able to connect people with the right CPAs, right? With the right financial planners, with the right mortgage lenders, with the right us as realtors, all of us collectively working with them to make informed decisions. That's what we're all about, right? Making informed decisions and educating the consumer.
Yeah, absolutely.
Cool.
Yeah, I
All
like
right.
it.
So I know that was a lot on that piece of it, but shifting gears one more time, what's going on around Mount Juliet over there in your neck of the woods?
Over in my neck of the woods, we've got a bagel war going on, as they're calling it in North Mount Juliet. It was a coffee shop war with, you know, 7 coffee shops in a 2-mile radius. And now it's, you got a bagel barn, you got Einstein bagels coming, you got the ugly bagel that just opened here beside the office.
I
And
heard that.
so, yeah,
The Ugly Bagel. What an
ugly bagel.
interesting name.
Mostly they're tasty, just a
We
little
got
ugly.
Starbucks over there. Do I get Starbucks?
Yeah, Starbucks just opened over here as
The
well.
pleasant surprise.
So here, Jimmy John's is coming in over here.
Although I'm a Dunkin' guy, gotta plug Dunkin', so I can't give Starbucks all the credit. But So are the bagel wars? Is it like are they like leaving nasty messages on their marquees, or it's not
No,
that
it's
cool?
just we just had an influx of the Bagel Barn just opened, and then Ugly Bagel just opened, and then Einstein's is going in over there in the old KFC building. So they just thought it was funny that awesome. Now we have all these
You know
bagel
what they
places.
should call it? They should call it the keto killer because you can't eat bagels. And they're really good. And
They are really good. They are.
I thought the whole world was on keto
South
now.
Mount
Like,
Juliet is a little sad that they don't have those options, but they can venture over to this side of the
no,
interstate.
I can't believe Mount Juliet's big enough that there's a north side and a south side, right?
That's always been the case.
Yeah, I don't know.
My parents moved here in 1986, and so it was North MJ, South MJ.
How old were you then?
How old was I? I was 5 when my parents moved to Mount Juliet.
Just telling your age.
Many,
All right.
many, many years ago.
All right. We're still trying to figure out where to put a sewer plant out here in Lebanon.
Bagels and sewer. What a
That's
combo.
it. That's it. They have shut down some. They have ruled some sites out with the caveat that they reserve the right to open those sites back up. So it's interesting. I think it has given. They do seem like they're going to make some intelligent choices. Fingers crossed. We'll see. But saying the right things at the moment, like true politicians. But man, I'm still amazed at how much Wilson County's growing. I mean, both over there where you are, out here in Lebanon, and again, we do a lot of. I grew up in Nashville. We run the Keller Williams over in Hendersonville. We have Huffaker and Hoke down in Murfreesboro. We have Simmons and Co. out in Cookeville and Putnam County, and Circle H now down in Williamson County. So we've got these interesting perspectives of all these different places. Still crazy to me that Wilson County is still growing so fast and such a great place to live. I love living here. I gotta say, man, like I am so proud of Wilson County when I go to these other heathens places that we can just get along and love each other and high five each other at church and take care of each other. And maybe I live in a bubble, but I love it here. So if you're not from here, you should move here and you should call me and Dana to do it. Right? All right. What are you doing this week? Going to Cooperstown?
We go to Cooperstown.
And that's cool. That's exciting. Yep. We just added one more tournament. So we're gonna do a tournament this weekend. We got one more. But all the boys are in the gym now, lifting weights for football. Going back to that side of so I was thinking about fall.
We've got football in the evenings, and he starts a tournament tomorrow, and then he goes to Shipyard in Charleston next week too. So we're here, there, and everywhere.
Fun. Still selling the heck out of real estate, no matter where you're at.
Yeah, that's right. That's right. Network.
All right, guys, if you need anything with real estate, if it comes to investing, buying, selling, whatever you need, we're here to serve you. Call us, call me, call Dana, call the Huffaker Group, call your favorite agent. Talk to you soon. See you guys.
Yeah.